Good evening. This is the market update for buy sell short for Thursday, November 8th, and the post-election sell-off continues with the market down 425 points since Obama won re-election. At least that's what the thinking is. But what's funny is we've got a few things playing out in the market right now. Right when the election was over, we had Europe all of a sudden rush back to the forefront as if they had been sitting on all this bad news for the last month, waiting for the election to finally have a winner here in the U.S. before releasing just an avalanche of bad news that just continues to come out daily. So, we got a few weeks of no Europe, and Europe said, enough of that. Time for us to get attention again, and markets just go splat. And we also have a lot of tax loss selling going on right now, especially in large cap stocks that are up big over the last couple of years ahead of the capital gains tax increase in January. Although when you step back and think about it, 15% versus 20%, the carnage that selling is causing in stocks is really kind of stupid if you ask me. But that's where we are right now. Looking at the 15-minute chart, you can see we broke down through the rectangle range that we were in and plunged into a pretty steep sell-off here. We get a better picture on the daily chart. And right here, we're looking at a one-year chart. And the reason we're bringing up the one-year chart is to show the next support level that we are looking at that we could test tomorrow and that we would be looking for a bounce off, and that is the 12,725 area. And the significance of that area is it marks the 38% Fibonacci retracement from the lows we saw last November. Fibonacci retracement, unless you don't know about it, Italian mathematician, certain levels that have been applied to stocks, 38% is usually a bullish bounce zone. On a retrace, it means 38% of the run-up is this area. Last November, we had a big sell-off in the market as well. We lost 1,000 points over the course of a couple of weeks last year. It was after Thanksgiving last year. So this sell-off that we're seeing in the market is something that is not uncommon. It happened last year, happened a couple of weeks later, but what may be happening is you've got all these funds and big money people selling stocks that are up big that they really like earlier in the tax loss selling season so that they can rebuy before year end. At least that's the thinking right now. But just ugliness. This is an ugly market right now. The risk reward is terrible. And for that reason, I am sitting on my hands. I'm not calling a whole lot of plays. If stops hit, they hit. As per the webinar we did last week, we are in a half position stance, high cash, small gains, and that's what we're looking at. And we're going to want to wait and see if we get a bounce on the market. We got our second close under the 200-day moving average. Now, we did have that same thing happen, an extended little, quick sell-off back in late May into June, closed 2 days, 3 days under the 200-day moving average, and then rocketed back up. So let's see what next week brings. But as for now, keeping everything really, really tight. Just to show you what the market is doing, it's almost following Apple down. Apple continues to free fall. That head and shoulders formation we posted a couple of weeks ago has come to fruition, and now the stock is down big and actually hit that 540 downside target, which, looking at the charts then, I said it was a possibility. I really didn't think they would let Apple sell off like that, and lo and behold, here is Apple down big, 20% over the last month. Quite a sell-off in that stock, and the market is following it down. And the thing on Apple, sell volume is accelerating, and that is typically bearish. This is a sell-off on increasing volume. Granted, it is very, very oversold, but we'll probably end up taking Apple as a cue on the overall market. If we see a big rebound in Apple, we're likely to see a big rebound in the overall market. One way to possibly play that could be some SPY calls. They have high volume, You can throw a little bit of money at it and get some nice upside. But, let's see what happens in the market tomorrow. It is Friday. I'm not going to be inclined to put a whole lot of bets on. I want to go into the weekend high cash. Don't want to be loading up on any plays. What I will hold and am holding right now are stocks that I'm okay holding for a little while. And I'm okay, well, okay is probably not a good word. I'm okay seeing losses in them because I know I can trade my way out of those losses, or I'm comfortable thinking that they're going to be higher in the next couple of months. That's what you should be sitting on if you want to be holding on to stocks. Otherwise, move to a very, very, very extremely high cash stance or all cash. I'm at 95% right now, and I love cash in a market like this. Let them just take everything down, and we can go shopping afterwards. Big winner today, though, was PTN. We finally got that trial data that we were expecting. What sucks is took them so long to bring it out that we didn't have our full positions that we had not too long ago. But big breakout, and got as high as $1.20 in pre-market. 90 cent was our target, 90 cent plus. But again, just to give you an idea how bad this market is, great trial data, and it gave it up. I mean, it ended up barely up on the day. 15% closed at 79 cents. Terrible, terrible action. And just a testament to how shitty this market is right now. PEIX is one jumped into a couple of days ago on the very nice chart setup, but it's been beaten over the head with the market, even though its peer, BIOF, has been running up. Earnings next week. Going to continue to hold on to this one for a snapback move. It's been very strong off the uptrend line recently, but again, this is one of those plays I know I can trade my way out of if I have to, but I'm not going to be holding a massive position in it at the same time. So that's the kind of market we're sitting in right now. Not a whole lot of going on. PopScan, extremely barren of plays, and just don't want to be forcing a whole lot of plays right now. And as for shorts, can be a dangerous game as well, playing shorts, especially overnight shorts. You can play some intraday, but you could wake up tomorrow morning and Congress could have agreed to a fiscal deal, and you could be looking at a 500-point gap up open. So I'm inclined to sit on high cash, wait for the market to give me some signals for bouncing, and then move in when the bounce starts and go from there. Be loaded on cash, ready and waiting to trade, and that's what we're doing right now. So, we got a lot of things, a lot of headwinds out there. Let's sit back, sit on our hands, wait for good trades, and don't be trading just to trade. Sometimes the best trade is no trade, and I believe right now this is a no trade market. So that's where we are. Any questions, shoot me an email, feedback, buysellshort.com, and I will see you guys in the chat room tomorrow. Good night.